Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Wednesday, March 4th, and my name is Raleigh White, and I'm coming to you live today from an overcast day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a continued focus on day trading using the Alpha Zone Pro. Now, he's going to begin the session by giving us a midday market analysis and update on his watch list for this afternoon. And then we're going to pivot. He's going to focus on the 5 different confirmation patterns that we all need to learn and fully understand. He's also going to talk about when to trade breakouts and pullbacks and reversals. Also, he's going to talk about how to trade divergence and also how to use the average true range when looking at day trades. And also, then he's going to share with us how we use the mechanical system on the Alpha Zone Pro to place trades. And finally, folks, he wants to talk about the biggest mind trap that we all need to conquer if we're going to have real success in our trading. So we have a terrific agenda on tap for everyone, and we're delighted to see you all here with us. Now, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with his presentation. And also, folks, remember that I've opened the chat room to everyone, but we do have some ground rules. Always be polite and supportive in your posts. Please keep your posts to topic. Also, no political discussions allowed in this room whatsoever. And try to keep that chit chat between one or two of you to a minimum, because all it does is interfere with the rest of us that are trying hard to listen and learn from the education and the information that Roger shares with us, because after all, he's here to give us an edge in the markets and to help us become all much more confident and consistent in our trading activities. Now, for those of you that were with us this morning at 8 o'clock Eastern Time for Roger's pre-market briefing, you'll note that there were several catalysts that we needed to be aware of. On the chip front, we noted that Micron and AMD were both up. Micron was up 3%, AMD up 1%, and that's after 2 consecutive days of losses. In the crypto sector, we noted that Bitcoin was up 4%, and as a result of that, coin was up 5%, as well as some of the smaller Bitcoin related companies. On the consumer front, we noted that Rost was up 6%, and we have Abercrombie and Fish and BF&B releasing their earnings before market open. On the tech front, we had GTLB down 7% for this software maker. On the medical front, we saw that Moderna was up 6%. And then on the international front, we had the Euro stocks was up 1.9%. They were down 4% yesterday, so this is a pretty nice little bounce back. But the Asian markets were all lower coming into the open. The Nikkei was down 3.6%, and Shanghai was down 1%. So not really much in the way of tailwinds coming, helping us here coming into the open. As far as the Fed is concerned, there were several things to be aware of. We have ADP job data being reported. We also had the ISM and the PMI services data coming out. And then we had crude oil inventory and the release of the beige book. So some activity here on the Fed front that we want to be aware of, in particularly in the morning. Now, as far as these catalysts are concerned, some people ask, Raleigh, why do we focus on these? Why do we even talk about those? Well, I hope you all know that Roger believes that the best way to decide what to trade, which is essentially what stock you want to trade, you have to start holistically with a big picture view of what's going on in the market. And part of that is just being aware of information that is either known or will become known during the trading session, but is not yet priced into the market. And that's what these catalysts are. They're flashpoints where information could come out that could have an impact on decisions that you make with regard to stocks that you're looking to trade. Now, as far as Roger's pre-market watch list is concerned, you'll note that he gave us 18 tickers this morning, 10 on the short side and 8 on the long side. Now, on the long side, you'll note that HTO is underlined. So anytime Roger basically says, hey, I really like this stock and the way it's setting up, to me, that, has it stand out among the others. So HTO was one that he talked pretty favorably about as far as the setup is concerned. Now, let me just talk about what a watch list is because a lot of people misunderstand that. A lot of people will look at these and go like, "Oh, Roger says I should short Baba," or "Roger says I should go long on Target." Not so fast, not so fast. A watch list means that these stocks are setting up and have the potential to be trades that Roger might take. And if you're with us in the morning, you'll know that he brings up each ticker and its associated chart, and he talks about the things that he would like to see in order for him to consider it as a trade. And if those setups do occur, more than likely he'll trade those tickers and he'll share that information in his trading pit or in one of his other premium alert services. Now, as far as Rogers pre-market, pre-open thoughts were concerned, we did note that the futures indices were all moving a bit higher into the open. And once again, that's after 2 straight days of significant overnight drawdowns. We did see that the put call ratio continues to remain very balanced, and that the VIX was lower. It was moving lower, but it was still above the 22 level. So VIX is still elevated, but it was definitely moving lower. As far as the bonds and the SPY and the QQQ and the chips and the mags are concerned, all were basically sideways, pretty much down in their range. So their structure hadn't been broken. They're basically all moving sideways in that range. As far as the sectors are concerned, they were still basically mixed, but tend to favor defensive stocks like energy, industrials, and healthcare. All right. As far as momentum is concerned, no real momentum to the downside, but Roger did point out that the NASDAQ 100 showed that the number of companies above the 200-day moving average had dropped below 50%. As a matter of fact, 49%. And that's a concern to Roger because that's an indication to him that the NQ 100 might be approaching bear territory. So once again, the number of NASDAQ 100 stocks below the 200-day moving average was at 49%. And so anything below 50 is an indication to be careful. So ultimately, though, his final points were be careful, folks. And also, he says if you're looking at some shorts, just be careful there, caution there on the short side, because we are tending and he's hoping and thinking that things are going to be bottoming out. So just be careful about that. And he said also, we're just kind of unforeseeable lands. Why? Because we have a war, that is in real time impacting the markets. So from his standpoint, he says, you know what, given news and things of that nature that's going on this morning, probably wait until the afternoon and keep a real sharp eye on the VIX and the crude. Because if you look at crude oil and VIX from his perspective, you'll know almost moment for moment how the market is reacting to the news that's flowing out of the Middle East. So from that standpoint, once again, I think these are sage opening thoughts, and Roger's going to give us his midday update on this in just a few minutes. So, as far as today's agenda is concerned, folks, once again, we're delighted to have you here with us. This is a continuing focus on day trading using the Alpha Zone Pro. And Roger's going to begin by giving us a midday analysis and his updated watch list for this afternoon. Then he's going to talk about the 5 different confirmation patterns that we all need to learn and understand. And what we're talking about, folks, is what do you do when price is approaching either a level of support and resistance? And how do you gauge whether or not we're going to have a breakthrough? How do you deal with that? And there's 5 different patterns that you've got to know. And that will work in any market, but in particularly when you're day trading the indexes that we'll be talking about. He's also going to talk about when's a good time to trade breakouts versus pullbacks versus reversals. And it's important that you know the difference between those 3. He's also going to talk about how to trade divergence and how he uses the average true range in day trading. And then he's going to demonstrate the mechanical system, the right-hand side of the Alpha Zone Pro, and how you can use that for trading. And then finally, folks, we all know that you can have all the indicators, you can have all the strategies in the world, but unless you have a handle, a grip on your emotions, it's going to interfere with your ability to be consistent. And Roger's going to share with us the biggest mind trap that you really absolutely have to get under control and conquer if you're going to have sustained success. So, folks, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session. discussion so as to not interfere with Roger's presentation. And also, guys, remember that the chat room is open to everyone, but we have some ground rules. Always be kind and positive in your posts. Number two, no political discussions allowed whatsoever. Number three, please keep those side conversations between one or two of you to a minimum, because all it does is interfere with the rest of us that are trying to listen hard and to learn from what Roger's sharing with us, because after all, he is here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. And with that, let's say hi to the team. Let's say hi to Matt. Let's say hi to Roger. Guys, great to see you. Matt, first of all, once again, solid work there. Solid work there in Alpha
Having
Zone.
another good day.
Yeah,
Yeah.
had a great day today.
Man, the
Really,
man
really
of
good day.
steel, the man of steel. And Roger, once again, such a great session this morning. Great way to kind of tee up the day, given the backdrops, that we're dealing with. And, we tend to talk a lot about catalysts. The war in the Middle East is just kind of an ongoing catalyst that has the potential in real time to move the markets. And I love that advice that you gave people, which is keep an eye on the VIX and keep an eye on crude. And it'll tell you everything that you need to know about how the war in the Middle East is impacting the markets. And, once again, that's your trademark, buddy. Keeping it simple, keeping us focused on the things that matter.
Exactly. That's you gotta keep things simple and straightforward. You can't during this type of market climate, you can't really get really fancy and out of whack. You've got too many things going on. You've got volatility, you've got trading range, you've got fundamental news. You have to really, really be extra, extra careful. The biggest problem is people see volatility and they think it's a license to just go crazy, and then and they do go crazy, and boy oh boy, it doesn't work out well. So we've been following very specific rules and we've been very methodical. And the key here is to really be disciplined in your trading. If you're not disciplined in your trading, you're not going to make any money whatsoever. This is not a market where you can just coast and make your it just doesn't work that way. This is a market where you really need to know what you're doing or you're going to get taken. You really will get taken by the market makers.
Yeah.
And the reason is they don't know what's happening either right now. So what they're trying to do is they're trying to play very defensive. And when they play defensive, here, let me just put this here. There we go. So let me just break the market down. You guys should be able to see my screen. And Raleigh, can you hear me better than yesterday? Does it
Oh
sound
yeah,
okay?
no, Roger. I think your volume is
Okay,
perfect, and we
good.
we see your screen very sharply here.
Okay, perfect, perfect. Just want to make sure everything is copacetic. Okay. So right now we're in a very, very crucial spot because we're above we're right near the 15 and the 8. Now, I want you guys to know something. These levels are not going to be very material when it comes to what's going on right now. Remember, acts of war, acts of God, and acts of war are intervening, superseding act. And I know it's a law school term, but what it means is something something passes you by that's so strong that it overshadows everything that could potentially be. It overshadows all the little things. Okay. Now, here's the interesting part. That's the 50-day. That's a major trend line. Okay. So we cannot ignore this. This we can ignore right now. This is just a minor level we need to pay attention to. We may have a little blip here, but this is a major level. And if we can get above you should write this down. If we can get above the 688.29, or basically the 688 level, we have potential to come back pretty well. And what I was telling everybody this morning, and it was really important, is we still did not break our structure right here. We closed yesterday within our structure in this range. You could see it probably a little better on the QQQ. You could see here we didn't really break our structure. We didn't break our trend here. You could draw it right there. You could see how we're still in this area right here. And even yesterday we were in this area. Now I want to take you and show you a different chart right now so that you can kind of get a feel for what we were talking about earlier today. And we took a profit on GE, by the way, today as well. Okay. So remember I showed you the VIX, and I said there's two things I'll be paying attention to today. very important things that I'll be paying attention to today. One of them will be the VIX. What did I say? I said, remember we were up here in the morning and I said, I want VIX to come back into this area. That's number one. VIX didn't just come into this area. VIX blew past this area and is now at pre-war levels. I'm going to repeat that again. VIX went to pre-war levels. You might have noticed your options, even if you have good, healthy options, they might have decayed a little bit in price. Well, think about this. We were at 28 yesterday. We're at 20 now. That's a 28%. That's like a 28% haircut. So implied volatility shrunk a little bit. This is why trading out of the money options overnight is not a great idea because you don't have any intrinsic value. And implied volatility is where this thing takes. So let me give you an example, okay? I want to explain this to you guys so you understand. Let's say you have an option, and that option costs $5, okay? And let's say $2.50 is intrinsic value, and let's say $2.50 is time value, okay? This right here only applies to time value, not intrinsic value. So $2.50 of that option declined by about 25 to 30%. And you can't do anything about it. And it has nothing to do with the movement of the underlying asset. It has to do with volatility. Now, well, Roger, I shouldn't trade option if that's the case. Well, take it easy. Take it easy. We don't have these spikes very often. They happen a couple of times a year. Okay, so it's not really worth considering because you don't know when they'll happen. They usually happen from very unforeseeable events like acts of war or acts of God. But you could see right here, they don't happen very often. Here, let's go 2 years. You could see 1, 2, 3, 4. They happen every couple of months, but they're not everyday occurrences. Okay, so they shouldn't really impact you trading options all that much. Okay, so the point is we're now back to pre-levels now, and also they don't typically go down this fast. Okay, this kind of went like from 20 to 30 or almost 30 all the way back down to 20 in 24 hours. That's pretty quick. Usually, they'll kind of stay up here. And if that's the case, that wouldn't happen. Now, same scenario, exactly the same scenario. But let's say now in this scenario that I'm going to give you, let's say you now bought the same $5 option, okay? But that option, this $5 option, is not divided $2.50. This option has $4 intrinsic value and only $1 time value, okay? Well, you're going to see a haircut of about 28 cents because it's only $1.28 here. So about 28 cents in implied volatility versus an option that has $2.50 in implied volatility where you'll see a haircut of about 80 cents, 90 cents, which is significant. So you see the advantage of having most of your money in the money options if you're trading overnight, swing trading, which is what we do. This is why I tell you, you should stay around 0.70, delta of 0.70. That way you'll be tucked in. And again, you can't avoid volatility crushes. It's impossible. And again, they don't usually happen this fast. But the advantage is when it happens this fast, you get them out of the way. And then the odds are we're not going to have another one for the next 2-3 months. Again, I'm just trying to explain to you the dynamics of the markets and things you may not be looking at or seeing that are there. It's like, this is like invisible stuff that's right there, but it's invisible. You just can't see it, but it's always there. And it's always causing your options to palpitate, what is it? Palpitate?
Palpitate.
Palpitate. I said palpitate. Palpitate. Thank you. Thank you. See, I'm using fancy schmancy words now.
Potentate.
Palpitate. And so you could see when this went up here, $1 Remember yesterday we were looking at E-mini. Here, let me go back here, just to show you this. Let's see what they cost now. So let's look here. Okay. See, this option yesterday was around 420. And this option yesterday was about, and I'm not talking about the price increase. I'm talking about just implied volatility. So today, the money's now back to $3 and slightly out is around 270. This is pretty typical. And again, we're still at 20. We're still in danger zone. We may have to come down. We may have to come down. And if we come down, remember, this is the level that I want to see us come down in. That eliminates most of the fear in the market. Just kind of give you a little perspective right here. This needs to come back down here. Once we're below 20, there's not that much fear in the market.
Mm-hmm. And I think in a way, Roger, it speaks to the fact you made the comment yesterday that when you have the situation like what's going on in the Middle East, it basically makes it difficult on technicals and market internals.
It
because
makes it makes them almost useless. Not completely useless, but it makes them almost useless because you see, if technicals are built on human emotions, those fundamentals completely intervene and break up those emotions. It's like I'll give you a really good example. You see movies sometimes of people like playing chess and they're like sitting there like they're frozen in time and they're thinking and they're in the zone and like they're sitting there for 2 hours. They're like, and something happens, like somebody rings the doorbell or a car, and they're like, what, and it like breaks up their all that focus is gone. That's how it works. So technicals is when the market is building. It's like, you see the movies, you see this all the time. I just saw this last weekend in like an 80s movie. You see those dominoes, people are building those domino sets throughout the entire house. And it takes like days and days and days. And some asshole comes in the door and goes, hello, and knocks the dominoes. And then everything these people worked for the last 3 months is gone. You see the whole domino crashing down. You've seen this in movies multiple times.
All the time, yeah.
Multiple times.
And it's happening. It's going to happen.
Right. Of course it's going to happen. You just don't know when. But that's how fundamentals work. They break everything you've been building. They just destroy everything. And a couple of days later, now here's the beautiful part. They usually interfere for 3 to 4 days. The common interfere. So if you see a trend, so let me give you a visual. I know you guys love when I give you those visuals. I'll give you a visual. So here's your trend. This is your uptrend. This is your nice bullish uptrend you're building, right? And then crazy shit happens. Excuse my French. And then 4 days later we come back up. The trade revolt. So if you look at this, you will find that you'll have these short-term trends lasting 3-4 days. And also up this way too, short-term trends. And then you come back to the mean. That's what this is right here. That's what this line is here. So it's always it's very important. A good example would be in gold. Let me show you in gold. That was a really good example. Okay. Futures. I don't have to do any of that. I have it programmed here. I'm getting pretty savvy with all this technical stuff. You could see it right here. I showed you a great example. Here's your first. See how it goes crazy? It goes nuts, and then it just comes right back to the mean. That's why it's always important to know the mean, because the mean is where price will gravitate. That's why we use, when we're looking at market internals, for example, this is one of the reasons we use this line right here. This line right here is telling us this is the highest traded price in the last 5 days, and this is the highest traded area in the last 5 days. Remember when we were yesterday, I said the market is below the 5-day value area? Well, now we're slightly above the 5, nothing crazy. And this area could change. If we have a higher value area than this will shift. But it takes a while. It has to be a 5-day average. So right now, the value area is right here, between 679.50 and 690. So between 691 and 679. That's your value area. And the 5-day value, the highest traded price, is 685.50. Remember that. Price wants to stay there. Also, I'll tell you another interesting thing. I think the reason we're seeing volatility today at all is because we had some positive news regarding the war, which I mentioned to you this morning. I think if it wasn't for that, this market would be very, very listless, because we've had 2 days of extreme volatility. So that's that too. And lastly, before I begin, I have a lot to say today for obvious reasons, as you could see, but I hope that's okay. I don't have the chat open. I just want to let you guys know I've been getting the most amazing testimonials. I don't have the bandwidth to post all of them. I post maybe, I don't know, 5-10% of them. But I really want to thank you. You guys have been just like sending us like the best testimonials, like the most fantastic testimonials I've ever seen. Life-changing testimonials. Thank you very much. It really justifies it and gives me good meaning to. I'm happy to do what I do. I actually told my wife, I said, I'm so happy to be able to help people during a time like this, because people are, acts of war are not fun times. So let's just kind of quickly look at the market. Let's look at everything. Let's put everything together, and then I'm going to give you a good lesson. So S&P 500. We are, and I told you yesterday, we never broke this level. We never broke this level right here yesterday. We huffed and puffed, but we never broke this level. And another thing, you know what I always tell you, if you're swing trading, don't make major decisions till the end of the day. Yesterday, if you made a decision in the morning, you would have cut this position out because it would have violated your level. But if you would have looked at this in the second half of the day, you would have seen that we're back in this area. And I told you guys, as long as we stay in this area, we'll be okay. And we stayed in this area, and now we're moving above the 100-day moving average. So right now if a lot of this is, if I'm repeating myself, it's worth it because we're in a very important time right now. And there's a lot of people here, and I think clarity right now would be useful. So we're coming up to the 50-day moving average. If we don't get anything negative worse than we've already heard, the market is priced in this war. Okay, the market knows about it. Nobody, even if you're in China, on a 20,000 feet up from mountain, you still know there's a war right now. So it's priced into the market. So the question now is, where do we go from here? And we are right now right at the 8-day EMA. And as I mentioned, it's not that valuable. The 50-day is much more valuable. We need to get back on this side of the fence, okay? On the QQQ, I'm using these charts because they're just easier to see. The white is easier to see the background. Right here, we're not even at the 100-day. We're below the averages, but we have not broken this structure. I put a lot more value in structure than I do on levels, okay? We have not broken the structure. Yesterday, we tried to break the structure. We almost broke the structure. Almost, right? Almost. Here, let me just move this a little bit. Right there. Okay. Put that right there. We almost broke the structure, but we didn't. We didn't. In other words, if you were to look at this in the second half of the day, you would see that we're well within here, and now we're coming up. We need to break this. This needs to break ASAP. If this doesn't break, we're going to have a down day. And it's a very high possibility because this is the structure that we could just stay around here for quite some time, especially right now. Let's look at a few more things intraday just to kind of give us a perspective. Semiconductors are doing a fantastic job here. And yesterday, you could see that we didn't close right at the 50-day, but close enough, close enough. And again, we didn't break the structure. You could see it right here. Notice I keep using the word structure a lot. The structure is very important. That's your foundation, okay? Matt, are you still long?
No, I'm out.
Okay, good. How much did you make?
$1.45.
How much?
$1.45.
And how much did you make earlier today?
$3.50.
So you're almost up 5 points on the day?
$4.95.
Outstanding, Matt.
I'm only up like $3 on the day. He's up 5 points on the day. I love it. I love it. I love it. Maybe this year I'll take an early vacation. Anyways, I like this. We're still in this structure. We're still at the 50-day line right here, and we're literally right at the 50-day moving average. Right at the 50-day moving average. We need to get on this side of the moving average. Okay? We need to get on this side of the moving average. But this is a good start. This is a good start in the right direction. Lastly, let's take a quick look at mags. Oh, I just got a note that GE finally busted through 340. Now, there you go. Just had to be a little more patient, I guess. We did take a profit on GE earlier. We took $2.50, but we could have taken another $1.50. It is what it is. Again, Mags, we have not broken this structure. We have not broken this structure. Okay. And again, we're now above. We're not above. We're at the 200-day moving average right here. And I need to see us here. I need to see us get above all this. The only problem here is we have these three levels. One thing I do want to remind everybody is tonight we have earnings on AVGO. Okay. And AVGO is the third biggest semiconductor company. Yes, it is. I know a lot of you are shocked to hear that, but let me show you. AVGO right here. It's the big daddy. It's the big daddy, okay? It's a big, big company. Okay? There you go, Vince. AVGO. AVGO. Okay, Cyrus, please don't go long AVGO. Implied volatility right now is pricing in here. See, I open up the chat and the first thing I see is Cyrus wanting to go long.
And guys, once again, this is not a place to post your trades. That's not the purpose of this room. I'm just deleting these.
But with that said, AVGO is expending. I was about to say this anyway. AVGO has 9% move built in right now. 9% move built in right now, which means my neck is killing me. Which means it's a $330 stock, which means it's going to move. It's expected to move about $27 right now, up or down. That's a lot. That's a lot of premium. Let me give you a better idea of what you're getting yourself into, okay? AVGO. Let me show you something, Cyrus. And it's a good learning tool. Okay. So check this out, Cyrus. Implied volatility on the options that are expiring in 2 days are 126%. Average volatility on these options is about 50%. Let's say 60%. 60%. So you're only paying twice as much for the option you're paying twice as much for the option. And 27 points is built into the stock. Now, Matt, tell us how often AVGO underperforms earnings expectations.
Give me a minute. I gotta get that pulled up. I don't have that open.
Open it and tell us. It's good to have this information, isn't it? It's good to have this information.
AVGO?
Yes.
%80 of the time it's within range.
So, Cyrus, let me tell you what you're looking at. Since you want to trade earnings on AVGO, you're looking at a stock that does not move its expected range 8 out of 10 times. That expected range happens to be 27 points. And implied volatility is 126%. That's priced into the options already. So if you want to do that, my friend, good luck to you. You have a lot of things. You have a lot of things going against you. A lot. Okay? So folks, that's a sucker bet right there. Just so you know. That's not a good bet right there. 126%. Typical volatility, 67. Maybe a time spread. I'll see later if I want to do a time spread on this. 80%, it stays within range. Okay. All right. Now, with that said, let me give you stocks that I'm looking at on the day. That is a market maker's dream. That actually is a good way to put it. Market maker's dream. Okay. Let me give you stocks that I'm looking at. BABA, okay, to the short side. You know what? It's got earnings tomorrow. Scratch it. Scratch that. JD. CPB. Beautiful. BSX. Once it gets up here, we'll play the gap to green. But for now, it's a short. See how I can have a position that's setting up for a long and a short at the same time? We were just talking about that yesterday, remember? Okay. TCOM. That's a nice swing right there, short. And MMYT. That's a beautiful, beautiful short right there. Let me see how the options look. Not good. No, terrible, actually. No, not good. Nice stock, though. Real nice look. That's about a 9.5 out of 10. Volume, you got everything here. This is a nice look. I really like this. You should remember this chart. That's a very nice looking chart. That's a very high probability chart right there. Okay, let's do the long side now. LYB. Nice breakout there. Moderna. FCX. BMY. That may be a good swing right there. One second. I've explained this before, but I'll explain it again. White volume candles are candles that are 20% or 25% above the moving average. You see this moving average? See every time it's above this yellow line, 20 or 25%. See like right here, like right there, like right there. Has to be X distance above this level. That means it's a high volume candle. Okay? TPR. Nice looking stock. DGX. Nice looking stock. CSTM. I've never traded this stock before, but it's a nice looking stock. Cinex. Okay. XPO. Sting. I like this stock. Sting. Very nice stock. Curb. That's a nice look right there. I don't like the volume, but it looks pretty good. And Freshpet. So there's still a lot of stocks setting up. Notice there's not a lot of tech stocks setting up, but there are a lot of stocks setting up. So we do have some upside stocks. Now, if you look at momentum right now, and I think it's important for you guys to see this, and I mentioned that this morning as well. I mentioned to you guys that if you look at the number of highs, 90-day highs, look at this, 32 stocks are making 90-day lows right now. Matt, did you see this? 32 stocks. This morning, we had 113, which is still not a lot. And I mentioned that to you. I said, look, this is not a lot of stocks breaking down. Were you there, Raleigh? I was talking about it this morning.
Yes.
Yeah. And to the upside, you have 85. This morning, you had 70. So you don't really have a big momentum right now to the downside, and you don't really have a lot of momentum to the upside. To be honest with you, the market right now doesn't look like it's drifting down at all. Right now, the market looks like it's back in that range and wants to go choppy once again. That's what this is telling us right now. If you look at the 20 bar high and lows, you got 123 to the upside, and you got 113 to the downside, which means you have a pretty healthy exposure up or down. But again, it's not overwhelming one side or the other. And remember, we literally are in war right now. And I'm not going to tell you everything that happened in the last 2 days because you were all painfully aware. But what I want to say is this is a really good reaction. This is a really good reaction in light of everything we're seeing. And I think our president, I'm actually going to say two nice things about our president. I know it doesn't happen very often, and this is not political. This is regarding this. He did two things that in this regard that I think were very good. Number one, he didn't play the old, this is going to be done in 5 minutes game. He let us know immediately that this may take a while, which is the opposite of what he usually does. He usually plays things like it's going to, like best case scenario. He did not do that. That is really, really good because the market now is pricing that in. It's not pricing in a 5-minute war. So that means if we have a short war, the market will actually move up from that. You understand? So I like that. That's very, very, very good. That's very good. There's nothing better than them giving us the worst case scenario instead of giving us the best case scenario, because the market will not have any more discovery to do in a bad case. And I don't know why he did it, but at least he did it. That's all I care about. I'm very happy about that. And two, they updated us about how they're going to, yes, he was being presidential. Yes, yes, Adam. And two, this morning, it was either this morning or last night. I don't watch the news in real time. Maybe you guys can help me out. But about the note about how the ships through the canal are going to have a chaperone, right? To make sure nothing happens to them. When did that happen? Last night or this morning?
That was yesterday that he mentioned that, that
in the
we were going to do escorts.
In the afternoon. Okay. And the market started firming up. Okay. So those two things are very helpful. He said two very, very helpful things. Those are very helpful things for the market. Because I know as soon as he said about the chaperoning, the market firmed up. So this is very good. Very, very good. I'm not going to say anything negative. These are good things. Nothing worse than giving us the best case scenario, because the markets hate that. Because then they have more pricing in to do and it just confuses them. But in this case, he didn't do that, which was great.
Yeah. So, hey, Roger,
Yeah.
I want to go ahead and post your shorts and your longs, but I was tied up doing a response when you were talking about your shorts. I had written down JD, CDD, BSX, TCOM, and MMYT.
Let me just post them all here. It'll be easier for everybody that way, okay? Let me just do it real quick. BABA, JD, CPB, BSX, TCOM. My wife had to take my mother-in-law. She had a procedure. She's back home. She's good. Everything is fine. But she had to wake up at 4 a.m. So we went to sleep half an hour earlier last night. So I'm like, I got a really good night of rest. I'm really happy. I don't have my cold anymore. We're doing well. So I'm very energized right now. I'm in a good mood. So those are the shorts. Okay, those are the shorts. And the longs are LYB, Moderna, FCX, BMY, which I really like, TPR, DGX.
Yeah, I got those, Roger.
Okay.
Yeah, I got everything here. I just wanted to know what the short list was because I missed the first few. Sorry about that. I try to pay attention.
No, it's all good. All good. And so anyway, those are the lists. Now, I want to teach you guys something today, and this is important. I want to teach you these levels, okay? So I want to show you this, and I want to explain how this, if you swing trade, if you day trade, so here's a level, okay? Now, I don't care if in your mind this is the 200-day moving average on a yearly chart, or if this is the VWAP on a 30-second S&P chart. Do you guys understand what I'm saying? It's just a level. In your head, if you're a swing trader, tell yourself this is the 20-day moving average or the 50-day moving average. If you're a position trader, tell yourself it's the 200-day moving average. If you're a day trader, tell yourself it's the VWAP. It's whatever level you want it to be. It's a level. That's all you need to know. Okay? It's a level. It's a price level. And basically, we want to get confirmation above that level. And again, it doesn't matter to me what you're trading, what time zone you're trading, what assets you're trading, if you're trading cryptos, if you're trading Forex, if you're trading options, if you're trading stocks. This is a way to confirm levels. Okay? All right. So I'm going to show you 5 ways to confirm levels. So the first one is, boom, you pass the level, you go in. No, you don't. You wait for 2 touches, and then you go in long like this. Okay? Boom. That's what you do here. Okay? That's a very, very, very important level. Okay? Here's number 2. Ooh, came a little bit low. Oops, sorry. Came lower than this. 2 bounces. If it broke this level. Okay? So, let me another level. Let me draw this for you. Goes up and you missed the first entry. Wait for it to come here. Another bounce. And then you go long. Right here. Here's another one for you. Comes up, you miss it, and then it breaks down. That's my favorite one. That's the suckers you in and then goes and breaks you down real quick. Wait for it to come here. 2 levels to consolidate. Need to have 2 bumps right here. And the 5th one, where it comes up here and comes down, comes up and comes down and comes up and come down. You just buy the first breakout level. Okay? You should know at any given time where you're at, which one you are at. Okay? You should know at any given time which one you are at. Okay? So again, let me erase all this. Okay? This applies to any trend line, any time frame, any asset. So there's no way you can come here and say, oh, this is not applicable to me. It's applicable to me. You may not know it, but it's applicable to you. And the faster you learn to identify each one, the better off you'll be.
So Roger, I know you're going to go through this again, but the thought crosses my mind. Is it your recommendation that we should exercise patience and avoid, for example, trying to get early, anticipating a move and waiting for the confirmation?
If you, or use that confirmation to add the other half of your position.
Oh, okay.
So let me show you.
Yeah, I see okay, yeah, please. Yep.
So right here, okay? Right here. So boom, that's your initial entry right there. Okay? Then that's your second entry right there. Or you wait here for confirmation and that's your first entry.
Okay.
That's a confirmation entry. That's an anticipatory entry. Okay? Okay. So let's try another one. Comes up here. Oop, it doesn't break it. Now it breaks it. You wait for confirmation. Wait for a second. Like this. Okay? So this one bounced but didn't break. This one bounced and then here's another one. It goes up, but then it goes up. Oh, God darn it. This thing makes it impossible to draw these things. Goes up, comes down. Now you need 2 touches. What if it just comes here and touches this? Boom. You got only 1 touch. You understand? So if it starts coming down, you need 2 touches. If it doesn't break this level, you only need 1 additional touch. So how about this one? It comes up, gets you in, comes down all the way here, but doesn't break this level. Boom. That's where you get in. Now it comes up, woo, breaks this level. Boom. There you go. So actually in here, you don't need 2. This one I messed up on. This one, you don't need 2 touches here. You need only 1. Okay? So I'm going to do it again. I want you,
Roger, to the downside, you just turn this on its head.
Yeah, it's the same thing. It's just most people like to learn on the way up. So
looking on the way up, right?
So let's say you need price to move above this level. Okay. It moves above this level, but now it's below this level. What do? You wait for 2 touches. Okay. What happens if it comes up to your level and then just comes here? Comes up to your level, comes here. Comes up to your level, comes here. You don't wait, you just buy. You did this a couple of times, you just buy here. Okay? Wes, as I said 10 minutes ago.
I'll handle those, Roger.
Okay.
Yeah,
Okay.
yeah.
And for everybody else who's actually listening to me, this applies to any asset on any time frame, whether you're trading a 30-second tick chart or an annual 200-day moving average. Okay? So please don't ask me what time frame this is on. I answered your question before you asked me that question. So I'm going to show you again the 5 different ways to confirm trades. This is the level you're supposed to buy once it confirms this level. So look, price will come up, come down, test again, then you buy when it goes above that. Here's again the level here, another level. It comes up, but then it breaks that level. Oops, uh-oh. There you go. Wait for it to confirm. Remember, you're supposed to buy above this level, but it goes up too fast. You didn't get a chance. Wait for 1 touch, 2 touch, boom. Same thing, except now it goes up. You miss out. You buy as it comes down, but it goes below your level. Whoops, you made a mistake. 1, 2, and go up. See that? Mm-hmm. So if price goes above and doesn't break as it comes down, you only need 1 more confirmation. If price goes down and breaks this level, you need 2 confirmations above. Capiche? So technically, you're always looking for 2 confirmations. But if you go below, you need to start all over again. You understand? That's kind of what I'm trying to show you. See how this doesn't break below this level? 1, 2, 1, 2. But you see how it breaks below this level? Now you need 2 more touches. So here's how you can remember this. If you break above your entry level, but you break below it, you need to now have 2 touches above that level. If you go above your buy level and you touch it, you don't need 2 levels. You just need 1 more. Okay? And if it never touches it, if it does this, whoa, 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 you just buy it. After it does this is good enough consolidation. That's enough to buy. Manuel, I answered this question now for the 5th time. I'm not going to answer it anymore.
Yeah, all time frames. Yeah. It doesn't matter. It doesn't matter what you're trading or the time frame. Could be Forex, could be futures, could be stocks, commodities, any time frame.
If you come here and if you think this is not applicable to you for whatever reason, then you haven't listened to what I've been saying. I've made this so it's applicable to no matter what you trade and no matter what time frame you use. Okay? You trade widgets, this works for you. You trade cryptos, this works for you. You trade stocks, this works for you. You trade E-minis, this works for you. I made it so it involves every person here. If you trade, you need to know this. If you don't know this, then you have no idea what the hell you're doing. There are 5 confirmation patterns, and you need to know you need to know how your trade is setting up. You understand? So let me give you an example. Let's say this is $100 level, okay? And price is moving slowly towards it. Okay, it broke above. What it does next is going to determine when I'm going to buy. If it breaks here, I'm going to need 2 touches. If it doesn't break, I'm only going to need 1 touch. See, I just showed you a difference. Big difference. What if it goes up and you didn't get in it, but now as it comes down, it touches here, but it doesn't break this level, versus missing your trade and it goes and breaks that level. Here you need 2 touches. Here you need 1 touch. And here you don't need any touches, because if you have a deep consolidation, you just need it to break out. That's all.
And the thing that you all need to understand is, Roger's not painting a magical level. It is a level. You know, every day, every morning, Roger basically talks about levels in each one of the indices. Another level is the previous day's high or the previous day's low or the VWAP or the 200-day moving average. These are all levels. And, you know, once again, we all know as price approaches something, we're taught, ooh, that's resistance. I wonder what's going to happen here. Okay. What Roger just shared with you is that the 5 things that could happen as price approaches resistance or oppositely in support. It's brilliant, Roger. It just doesn't matter. It's, you know, it's whatever your level is.
And you should start, and what you should start doing is saying to yourself, and I want you to understand something. When you can get that nuanced, where you can get that nuanced to, if I know that it's breaking this level and I need to buy here and I'm going to wait for 2 touches versus 1, you're getting really, this is what separates a regular trader from a 80 to 90% win rate. These little details, you see, finding the right chart, waiting for a confirmation. By the way, I use these exclusively in a high flyers program. I use this exclusively in the high flyers program, where we've had every winner in the month of February, and so far in March. We haven't had a loser yet. January was the god awful month, and then February and March, it's Murphy's Law, right? When we start a new program, right?
Yeah, and so, if you don't know, the High Flyers Club is where Roger's basically trading small cap stocks. These are not penny stocks. But once again, these are stocks that don't have options. They're relatively low priced.
They're listed. They're all listed stocks.
They're all listed.
Yeah.
But they don't pay attention to what the regular market is doing. But that's what the High Flyers Club is.
Matter of fact,
and Roger, and that would make sense. That makes perfect sense.
And as a matter of fact, the last couple of days when the market's been going down, we've been profiting on good long trades. You know, 10, 20, 30% each trade on the underlying. You know, it's pretty good. I've been posting a lot of those feedbacks on the Telegram channel, but we've been doing really, really well. It's just Murphy's Law. You know, when you launch a new program, it's Murphy's Law just never fails. So anyway, folks, it's really important that you pay attention to these type of details. And if you're wondering, well, Roger, you know, I've been trading for 30 years. Nobody's ever explained this to me before, because you've never, ever, ever had somebody who actually does this for a living teach you this. Okay, that's the difference. That's the difference. It's very little subtleties make all the difference in trading. You know, learning to trade is one thing, but becoming a professional trader is a whole different thing. And you have to learn little nuances, like what is the quality of a stock? Is the stock doing this all the time, or is the stock actually trending? Nobody ever taught me that. You know that, like, you would imagine the first thing they would tell you in technical analysis is, hey, stay away from choppy stocks. Find stocks that are like gliding, right? Nobody ever tells us that. Nobody ever teaches us that. It's amazing. It really blows my mind away. And nobody teaches us the 5. There's only 5 ways a stock reacts by a trend, next to a trend. There's only 5 ways. And you need to know this. Because I paid it. Do you have any idea how many charts I've looked at to identify these 5 patterns? Do you have any idea how many dates with my wife I missed because of this? You wouldn't even know. I wouldn't even be able to tell you where to begin. Okay?
Yeah.
It works on any type of it works on any type of chart.
You draw your levels, you know, these are bar charts that Roger's using right here. You know, and those would be the best ones. So, Roger, we have about 5 minutes more to go. We had a full agenda. We covered some great things. And if I might make a suggestion, because I think you were getting there, can you take a moment and talk about that biggest mind trap we have to conquer?
Yes, that's exactly actually what I wanted to talk about. Now, folks, I see people doing this all the time, and it really shows me your vulnerabilities come out when the markets are volatile, you understand? Because your positions are either making you a lot of money or losing you a lot of money, right? It's one way or the other. You can't have it. You can't have it. I mean, well, yeah, I guess you could, but your emotions come out. The real you comes out. The real you. Remember, I had a class one time, and I said, you know, it was funny. I was talking to a psychiatrist about this, right? And she was a psychiatrist that dealt with people who had drinking problems. And she was telling me something, and it really clicked. She said, I get people coming into my office, and I can always tell when they've had their last drink. I'm like, well, what do you mean? She's like, and folks, please, this is nothing. I'm trying to illustrate a point. I'm not really talking about people drinking. This is not what this is about. She said, it's funny. You give me a guy who just had a bottle of vodka, and he'll agree to anything I tell him. And not because he's drunk, because he's happy. He's like, okay, I don't want you to drink for a week. I don't want you to do this. I want you. He'll be like, absolutely, absolutely, absolutely. And you give me a guy that hasn't drank for 24 hours, and that's when the real personality comes out. And I'm like, oh, yeah, that's interesting. She's like, I'm sure it happens with you, too. You talk to somebody who just made $100,000, they're going to be like, I'll agree to whatever you want. But you talk to somebody who just lost $100,000, the real them is going to come out. And that's kind of what I'm trying to say. This really doesn't have anything to do with alcohol, okay? It just happened to be, that's how I kind of stumbled into this thing. And I said, and I thought about that for a while because it made a lot of sense to me. And the last 24 hours, 48 hours, we've had a lot of people who made money and lost money because markets have been volatile. And it really brings out your personality. And one of the common traits I've noticed is people are sending me emails and they're trying to get me to validate for them what they see in the market. Basically, they're trying to get me to, because they're vulnerable, they're trying to get me to say, yeah, I think your stock will go up, or yeah, I think your stock will go down. And folks, I want you to understand this, and I don't know how else to explain to you. The biggest mind trap you can possibly have is trying to predict what the market is going to do. Okay? If you can get that out of your head, you will become a 5 times better trader. You cannot predict what the market is going to do. Nobody can predict what the market is going to do. If you stop trying to predict what the market is going to do and just start watching what the market is doing, you will become, that is the biggest mind trap in this world. And let me tell you something else. You are conditioned to do that every day. You know how? Because every guru is trying to tell you they know where the market's going to go. All these, how about the news? They always have a justification of why the market is doing what it's doing. If the market goes down, the AI worries. Right? And if the market's going up, markets are less worried about AI. Well, it's much easier to say that. We've been seeing that the last few days, right? Notice every time chips are up, there's less concern about AI. Every time the markets are down, there's more concern about. They're trying to justify what is happening to you because they can't just say it's just going up. It's just going down. We don't know why it's going up. They can't do that. You'd be like, well, thanks a lot for that. Folks, listen to me good. There's no way to predict what the market is going to do next. Nobody knows what the market is going to do next. If you trade like you know what the market is going to do next, you're going to get yourself into deep doo-doo because you're going to pick bigger position sizes because you know what the market's going to do in your mind. It is a mind trap. It is a mind trap. I know that you think that I know what the market is going to do sometimes, or Matt knows what the market's going to do. So we have no idea what the market's going to do. I've been doing this for 32 years. And if you think I know what the market's going to do next, then you're not, I'm not lying to you. I have no idea what the market will do next. And when I look at the market with the idea that I don't know what the market's going to do next. Okay? Folks, stop trying to predict what the market. If you spend 1/10 of the time in analyzing price action instead of trying to figure out what the market is going to do next, you would be 100 times better trader. Just focus on what's in front of you and forget about trying to extrapolate the future. Use these 5 patterns to confirm what the market's doing. Use the market as a guide to confirm what you think, not to predict what you. Don't do it. Don't do it. It's very hard. And I know you think that if you can if you can predict what the market's going to do, then you have some degree of control in this. Folks, you have no control in this. The market is a multi-trillion-dollar beast. You're not even a pimple on its butt. You and I have no idea what it's going to do. We're just there along for the ride. The best gurus, if you want to call them that, the guys who really know what they're doing are going to tell you they have no idea we're not predicting the market. I'm gauging price action. I have not looked at what Matt and I do not sit here and think about what the price is going to do next. Mm-mm. We just simply react to price action. Mm-hmm. Okay?
Well, and again, the thing is this, Roger, which I really appreciate what you do. That doesn't preclude you from thinking about what could happen.
Of course.
Okay? Because once again, as a technical analyst, you can draw your trend lines and things of that nature. But I love the way you say, look, guys, I hope this happens. And if it does, this is what I'm looking for. But that's a lot different than I know this is going to happen and placing a bet on it.
What you need to do is say, if the market does this, what am I going to do? If the market does this, what am I going to do? Mm-hmm. If the market does this, what am I going to do? One of the things you might have noticed about me or Matt, we make very fast decisions. You notice we never have to, like if I see a stock, I'm like, okay, scalp here, go long here. We don't have to sit there. You know why? Because we know ahead of time, if this happens, this is what we want to do. If this happens, this is what we're going to do. What a lot of you guys are doing is saying, I think the market's going to do this, therefore I'm going to do this. But you don't sit and say, well, what if it doesn't do this? You need to have a contingency for every scenario ahead of time. I know Richie. I've talked to Richie. Right now, I know the stocks he's long. I'm not going to mention them, but I know that he knows his exact stop loss level and his profit target. And if I say, okay, what if this happens, Richie? What if he has the contingency plan? We've done this. I've done this with him live in front of like 10 people. I said, okay, we'll do it live. We'll do this. We'll play this game. We'll play this game when we have the live class. Richie's right there. He says, oh yeah. He's got his price levels. He knows exactly what he's going to do. He's not he doesn't care what the market does because he knows what he's going to do in response to it, which is way more important than trying to predict what the market will do. Understand? Please stop thinking like that. If you do that, you're going to look like a complete beginner. Professional traders do not guess what the market's going to do. We trade in odds and statistics and probabilities. All right? All right? So just FYI. All right. Well, any other questions before I move on?
No, Roger, I think so many people really appreciated the time that you took. And we have multiple requests for a document that cleans up your drawings. And we can talk about that a little bit later because it wouldn't be difficult. But the thing is this, guys, I just want to challenge you to just rewatch what you did and draw your own chart. It's not that hard. Draw a level and say, Roger talks you through it. But, if you feel more comfortable, if there's a document from Roger that says, here are the 5 considerations, well, we'll take a look at that. But, I don't think there's any reason why anybody here in this room shouldn't be able to go ahead and do it for themselves. Now, before we move on, folks, I want to let you know that everything here you can watch in a replay. And I've just posted it here to you all. You just go to Roger's YouTube channel, and you can go ahead and look at today's VIP room, and you'll be able to go ahead and watch this over and over and over again. But it was a great session. The other thing is this. For those of you that are watching this on YouTube, we're getting ready to stop the stream because YouTube doesn't like it when we talk about the things we're getting ready to talk about or play music or do the chuka dance or anything like that. Roger, they just frown on those activities. So from that standpoint, we're going to stop the YouTube screen. Come on over to the Zoom room here with the rest of us, and Roger's going to continue talking about, everything that he's discussed over the past 3 days.